What's up everybody, and welcome back to the channel. Today we're going to be doing a stock review on one of my favorite holdings, Store Capital. If you like this video, be sure to like and subscribe. The goal is to hit 1,000 subscribers with this channel, so that would be greatly appreciated. First things first, I wanted to talk about how I first heard of Store Capital this year, and that is from this article. This article talked about how Berkshire Hathaway had acquired more shares of this company back in August, bringing their total shares to 24.4 million. With Warren Buffett being regarded as one of the best investors of all time, owning this much of this stock piqued my interest. I continued my research of the stock, and it took me to another article. This one was diving more into the business model of Store Capital, and this business model is what sold me on this stock. So here's the next article. Store Capital actually stands for Single Tenant Operational Real Estate, and we will discuss what this means for the company's business model. This means that each property they own is rented to single tenants, so there is no large-scale malls or strip malls in Store Capital's tenant base. The CEO, Chris Volk, actually states that they're not into owning or renting to retail companies at all. He claims that most of their client base can't be disrupted by big tech companies like Amazon, who seems to be slowly taking out other retail stores such as Toys R Us. If you look into Store Capital's client base, you see that this is true. It seems like the tenants they rent to cannot be forced out by big companies such as Amazon. For example, they rent to restaurants, early childhood education, fitness clubs, movie theaters, vet clinics, pet boarding centers, oncology clinics, and urgent care clinics, just to name a few. As you can tell, these types of places can't be substituted by big tech and big retail companies. They are establishments that for the most part must have some type of interaction rather than just going online to order a good or service. This makes me agree with Folk that Store Capital actually doesn't involve itself too much in the retail sector. Though they do have retail stores as tenants, these stores are in niches that mostly are not just ordered online. This would go to show why Store Capital did not take the same hit last year that other REITs saw, as around 9,000 retail stores closed their doors last year. With Store Capital staying away for the most part from retail, they do have, I think like Bass Pro Shops is one of their tenants, and Ashley Furniture Store, but those are kind of types of places where you tend to go to the store to buy. You're not going to order furniture online, really, usually, and like Bass Pro Shops, you can't order a gun online unless you have, certain documentation, so that's kind of a go to the store type of thing too. This business is perfect for the landscape of the future. With big tech pushing retail stores into less profitable markets, Store Capital fights that by keeping its hands clean of markets that can be swallowed up by online retail. The business model is what first intrigued me the most about this stock, but what also caught my attention was the nice dividend that this company pays to its holders. At the time of this video, Store Capital is paying a healthy 5.2% dividend yield, which comes out to be $1.44 per share annually. It does pay quarterly, unlike some REITs that pay monthly, but that's not something to really worry about. So is Store Capital worth buying? I believe so. With its well-diversified group of tenants, as well as receiving a large portion of their rent as the economy begins to recover from the pandemic, I believe Store is a strong buy. Now, I'm not a financial advisor, so this is all personal opinion. You should do your own research. So when you do your own research, you might come look at the financial statements of Store Capital. And when you look at the financials of this company, you'll see steady revenue growth. If we look at the, let's look at the income statement here. Now this is not including 2020. I would assume that 2020 is a little below 2019. I don't know for a fact, but obviously with COVID, it's probably a little bit lower. But when you look at the income statement, you see from 15, 16, 17, 18, and 19, 5 years of steady growth. And 18 and 19 really have taken off and started to, really see that income improve. It looks like 19 was pushing that 300 million income point. Let's see, 2019 667.87 million revenue or sales, and their expense for 2019 was 446.84 million. So there's around 220 million profit right there. So that's nice to see when you're looking at a company to buy. Next, then you keep going. Here's the balance sheet. The 5-year trend, their cash and short-term investment kind of popped up in 2019. It was actually a little bit on a downturn, but their cash was probably being used to spur on their short-term investments. Their total debt and liabilities going up, but that's obviously, acquiring debt to buy more properties, to rent out, to increase your revenue. If you can see on the left side here, we've got profitability, gross margin, plus 64.98, operating margin up, pre-tax margin, return on assets, 3.69. All this, return on equity, return on total capital. I think earnings per share right here, 1.24 for the basic earnings per share. It's just really a solid company that I have done a lot of looking into, a lot of reading up on. I really like their business model. As I stated, that's what really first brought me into this stock. Then you got your cash flow, another 5-year trend of going upward. Free cash flow for 2019 was $458.33 million. So there's some free cash flow that they can either acquire more property, they can pay down debt. You got almost $2 for cash flow per share, 66 for free cash flow per share at a steady uptrend. I mean, this company just at a steady uptrend, and they really can combat that retail, that Amazon, killing off the retail store. They can really combat that because they stay away from those retail stores, like I said earlier. And also, it's not in this balance sheet here, or it's not in this financial statement here, but there's been about, I think, let's see, I have it in my notes somewhere. Here we go, I found it. So during the past 12 months, Store Capital's average dividends per share, because that's what we're after in this dividend growth portfolio, them fat dividends. Dividend growth per share over the past 12 months, it went up 6%. During the past 3 years, the average dividend growth per share, per share growth rate, was 6.7 per year. And during the past 5, the average dividend per share growth rate was 45.4%. Now that 45 is kind of pushed up because they must have maybe doubled their dividend before. I'd have to look at the 5-year chart, but so over the past 5 years, it's gone up, a great amount, 6%. You're beating inflation plus getting some on the top, so you're doing pretty good. In the past 8 years, they have, in the past 8 years, which I think 8 years is as long as they've been in. I think they IPO'd in 2012. I could be completely wrong. I need to look into that, but they've gone up 119% on their dividend. So it's really nice to see. The lowest they ever increased was 6.7, and the average is 7.2 per year over the past 8. So great to see a nice dividend growth rate. That's what we're after with a dividend growth portfolio. So, Store Capital, I'm really loving it. I'm going to buy more actually probably this week, I think, or next week. And we see a stock price that has steadily grown with this company. Let's go the past 10 years. Yeah, they IPO'd actually in 2015. So I thought it was a little longer ago than that, but as you can see, we've just had a steady uptrend, nothing, no huge jumps, nothing like that, but just a steady, solid, growing company, and that's what we like to see, right? We don't want to see that volatility, big jumps up and down. You want to see a steady, increasing, uptrending stock that pays a nice dividend. And then, the old Corona time hits and it dropped down to $18.65. I wish I would have got in then. I think my average price is like $27.70 or something. But we see a stock price that continually has been on the uptrend because I really think that it's because of that great business model. The stock hasn't fully recovered from the corona, obviously. Let's see, the high point was about 40, but I see it easily recovering from that within a year. If not a year, then it's not going to take 10 to recover. I feel like after the election, whichever way it goes, economy is going to recover at some point. But right now, the stock is just highly undervalued, as the corona has not affected this company as hard as it has, like, other REITs. In my opinion, this stock has huge upside potential. It's going to go past 40. Its pre-pandemic highs of $40, almost 41. It's going to continue moving forward in the future, and it's also going to increase that dividend along the way. I mean, really, I don't see a lot bad. I don't have anything bad to say about this REIT. I do own this stock, and I plan to buy more. I just wanted to shed some light on this great stock that is the approval of investors like Warren Buffett. So I hope you gained some knowledge from this video, and appreciate you watching. If you made it this far, be sure to like and subscribe. I'd really appreciate it.